Right, so I just thought I'd make a quick video about a property investment strategy called Buy, Renovate, Rent, Refinance, or B.R.R.R for short. So I get asked about this kind of method a fair bit from some of the kind of new property investors that I do finance for. And just disclaimer, obviously I can't give financial advice. I'm not a financial advisor, but I can tell you about potential property finance products that are available for this method. So the concept is simple enough to understand. You purchase a property that requires refurbishment. You go on and refurb the property. You then get a rental tenant in there, and then you refinance it at the end at the new market value of that property. So how can you use finance? So you don't have to have the full amount of cash to purchase the property. So in the first instance, when you're buying the property that requires renovation, first of all, it's worth noting that if the property is unhabitable, then you wouldn't be able to get a standard buy-to-let mortgage anyway, even if you were happy just to purchase it, renovate it, and not refinance at the end. So the property to get a buy-to-let mortgage needs to be in a habitable state, with a fully functioning bathroom, kitchen, and to be up to modern standards. So with that in mind, you can use for properties that require refurbishment and that are unmortgageable, you can use bridging finance. So you can get bridging finance, so you can get that towards both the purchase and you can also potentially fund towards the actual renovation as well. So you can get contribution towards the cost. That would usually be in arrears, although in some cases there are some funders that will just fund initially to a higher loan to value at the upfront without any additional drawdowns. But depending on circumstances, would depend on which of them is the best for your situation. So that's the start. So to buy, you can use, like I say, bridging finance for purchase and contribution towards the renovation costs. And then at the end, when you're looking to refinance, so you can then look to refinance onto a buy-to-let mortgage at the new market value. If it's under 6 months since you purchased, there's going to be less options for that. Some funders will refinance at the purchase price, but there are some funders that will look at it even under 6 months at the new market value, or after 6 months. I mean, generally, it often takes 6 months once the purchase has been complete, to complete the renovation and get a tenant in the property. But either way, that you can look at it and look to refinance onto a buy-to-let mortgage at the new market value. We're in April 2021, and you can, at the moment, currently we do have lenders that go up to 80% loan to value on that. So yeah, that's it. So that's buy, refurbish, rent, refinance strategy, and that's something. And if you'd like to get in touch with myself, it's Marcus at Bolton Business Finance. We can look at the finance options for your next project. So that's it for today. Thanks for listening, and I'll see you again soon.